21st Century Fox has now agreed to Disney's $71.3 billion counterbid after they upped their price to top Comcast's offer to buy the company. Disney raised its bid for the bulk of 21st Century Fox's film and television assets on Wednesday, sweetening its deal with cash to upend Comcast's $65 billion offer. Fox's board of directors said Disney's latest offer was superior to the proposal made by Comcast. The new cash or stock deal may be attractive to Fox's largest shareholder, Rupert Murdoch, who owns 17% voting shares along with his family. The Murdochs face a large capital gains tax bill under Comcast's all-cash offer. Disney's previous offer was all stock. Disney's move had been expected ever since Comcast's bid, which was higher than Disney's original offer in December of $52.5 billion in stock. Comcast's was all cash, while Disney's new offer of $38 per share is half cash and half stock. Disney's revised offer of $38 a share, which would be split 50-50 in cash and stock, is $10 a share higher than Disney's first bid. Comcast's last bid was for $35 a share in cash. Disney will also take on about $13.8 billion of Fox's net debt, implying a total transaction value of about $85.1 billion. The deal would include Fox Film and TV studios, some cable networks and international assets, but not Fox News Channel or the Fox Television Network. "We are extremely proud of the businesses we have built at 21st Century Fox and firmly believe that this combination with Disney will unlock even more value for shareholders as the new Disney continues to set the pace at a dynamic time for our industry," said Rupert Murdoch, executive chairman of 21st Century Fox. "We remain convinced that the combination of 21CF's iconic assets, brands and franchises with Disney's will create one of the greatest, most innovative companies in the world." The latest move by Disney raises the hurdle for Comcast, which has to decide whether it is feasible to counter with a higher bid. Analysts and investors widely expect a counter bid from the largest U.S. cable company and owner of NBC Universal. Comcast, based in Philadelphia, did not immediately respond to a request for comment. A Bloomberg source said Disney is close to winning U.S. antitrust approval for its deal with the Justice Department, reportedly set to approve the deal within 2 weeks. Disney Chief Executive Officer Bob Iger played down any antitrust concerns in a deal and said he has been working with regulators around the world for the past 6 months. "We believe that we have a much better opportunity both in terms of approval and the timing of that approval than Comcast does in this case," Iger said. Comcast may face tougher regulatory scrutiny if the deal involves any transfer of television licenses, which would trigger a Federal Communications Commission review, said Keaton Javeri, a former Justice Department attorney who served on its Telecommunications Task Force for Internet Policy. AT&T structured its $85 billion deal to buy Time Warner to avoid such a review. FOX shares jumped 8% to $48.23, while Comcast rose 2.1% to $33.52. Disney added 1.2% to $107.43. Sky plc shares gained 3.1 PCT as investors hoped Fox would increase its offer since the company could afford to pay more due to the bidding war. The European pay TV group, 39 PCT owned by Fox, is also being pursued by Comcast. Major sports and news assets including Fox News, Fox Business Network and Fox Sports are not part of the businesses being sold and would be spun off into a separate company. Following the deal, Fox shareholders would own about 19% of the combined company, Disney Chief Financial Officer Christine McCarthy said on a conference call. Disney no longer expects to complete the $20 billion share repurchase announced in December, McCarthy said. Fox said it will postpone a special shareholders meeting in order to provide stockholders with an opportunity to evaluate Disney's amended offer.